This is Michael Clemens with II Research on our II Insights podcast. Today, we have the pleasure of welcoming Kenton King, who's a partner of mergers and acquisitions and corporate governance at Skadden, Arp, Slade, Meager, and Flom out of Palo Alto. I think the whole podcast could go over your background. So I think, needless to say, your specialty includes Japan for decades, I believe. And needless to say, also, your firm is very much involved with many multi-billion-dollar acquisitions and M&A transactions. How else would you introduce yourself?
Well, thank you, Michael. I'm delighted to be here. When you say I have a long background, I just hear that and I think old. I must be old if I have a long background to go through. But a lot of my misspent youth was spent in Japan, as it turns out. So I lived in Tokyo for a couple of years as a student, and then actually, between college and law school, I lived in Tokyo working for a Japanese trading company, Marubeni, for 4 years
Oh, wow.
before I went to law school. After law school, I started, and my entire career has been at Skadden as a mergers and acquisitions and corporate governance attorney. And over 25 years ago, I helped open up our Palo Alto office, which really focuses on tech, M&A, and crisis situations. And over the years, I've spent a lot of time not only on M&A, but activism and corporate governance issues. And throughout that period, I have continued to be involved in Japan, have gone to Tokyo periodically, a couple, three times a year, except during COVID, of course, and have always had a hand in Japan and have kept up with speaking Japanese. My wife is Japanese. That's helped a little bit. And more recently, I've been spending even more time in Japan as I think Japan has really changed quite a lot in the last few years on the corporate governance front, and it's become a much more interesting, exciting market for practitioners like me who advise companies, particularly Japanese companies, on issues that they may face, both cross-border governance and activism issues.
So I think you know as well or better than I do in Japan, culturally, hostile takeovers were never really appreciated culturally. And even recently, the government has put out through METI guidelines on how to, play nice, so to speak, with regards to M&A transactions. Do you see this picking up in the future? I mean, after COVID, for example, with II and the surveys that we do, there were a lot of questions coming from the buy side about cash hoarding by companies. Are they holding on to this cash because they're looking to acquire something? Is the population causing any kind of a concern for people as we move forward with regards to demand and supply? And so I think M&A is always a big question mark with regards to people in the market.
Yeah, let me say a few things about that. I think that structurally, there are a lot of things that make Japanese corporations attractive possibilities for shareholders that want to see an increase in the value of their stock and want to take a more active role in approaching Japanese corporations. And I think also, particularly for private equity funds who see value there, and for other strategic players around the world. And one of the things that makes the Japanese market structurally, I think, interesting from that perspective, or undervalued, really, or maybe the right way to say it is a market where participants see potential to unlock value, is you do have structurally a lot of cash on the balance sheet. You've got a lot of orphan subsidiaries. You've got many companies that I think suffer a conglomerate discount. If you look at sort of some of the parts analysis of the value that makes up the corporation, you can see that there's a conglomerate discount there. And so, unlike the US, I think there's where a lot of those inefficiencies have seen um, get corrected both by boards of directors who are looking at those issues, but also through outside pressure, both through institutional shareholders, activist shareholders, strategic companies that are looking at opportunities. All of that serves to act as checks on those sorts of, I think, structural inefficiencies that you see more of in Japan. I think that's fundamentally it's changing now, and you're seeing start of that value unlock starting to occur in Japan. There's many, many factors to it. One of the things that is, you mentioned the METI guidelines. One of the things that's surprising to me is I'm already, and those are relatively new guidelines, I'm already in my practice seeing the impact of those guidelines on Japanese corporate boards. Even though from an American lawyer standpoint, we would look at guidelines that like that, and our first reaction is inevitably, gee, they don't have the force of law. Where do you go to enforce them? And the way we look at the world doesn't, and it doesn't have to be the way it is in the United States. And the way it is, though, in the United States is you've got a built-in plaintiff's bar with shareholder lawyers who bring lawsuits against boards of directors when they fail to discharge their fiduciary duties appropriately. So, in the M&A context in the United States, you always have as the background the court as a referee. Frankly, it's not a great system to have to litigate these kinds of issues with discovery and all this distraction that has. But there's an umpire there
Sure.
that makes sure that, in effect, the boards take merger proposals seriously. They actually will look at them, study them, and view them with a view to what's best for both the company and in Japan stakeholders. In the UK, for example, you have a takeover panel. It's not litigated, it's not litigious, but you have a takeover panel and a set of rules that publicly traded companies and boards of directors are obligated to abide by. And that's a real enforcement mechanism. So I look at those examples. When I first saw the METI guidelines come out, my immediate reaction is, well, who's the referee here? Who's the umpire? Because
Mm,
it doesn't look like there's one around. And what is surprising to me, and this is a Japanese culture statement, is just the fact of having the METI guidelines and having those out there as expectations that boards of directors ought to hold themselves to in responding to a takeover proposal, whether it's private or public. Um, that has real force. And my experience has been that boards of directors take those guidelines quite seriously already. So I
mm,
think it's actually a very good set of guidelines. I've seen board presentations where a banker or lawyer will take the board through the guidelines, what they call for, and direct the conduct of the board in accordance with those guidelines. So I think it actually does have the prospect of potentially changing behavior.
mm. I mean, I don't know the exact timing, but I think it was somewhere around the controversy around Toshiba, where
Mhm.
Toshiba and Meti was mentioned, in the news about that. So to a degree, I thought maybe this is Meti coming out on a PR front and basically saying, actually, this is how things should be going forward. But then you also wonder sometimes if they're just a mouthpiece for the Japanese government overall. And so I don't think it's totally unselfish for the Japanese government to be looking at the market and looking at governance vis-a-vis, the boards of directors and how they're looking out after the companies. Because from what I understand, the Japanese government is also heavily invested in the market. And so it's not totally unselfish what they're trying to do without necessarily maybe activist investors telling them what to do or coming on to the ownership of companies when it's the cross shareholding is unwinding, etc. But rather maybe a more proactive way of moving forward vis-a-vis governance and a lot of the rules that are going into place around capital uh, management.
Yeah. Yeah, I agree with that. I referred to the structural value unlock that is possible in Japan, which is one of the reasons why a lot of activity, Japan is attractive, a lot of activity. Um, Japan has become the second most active country for activism in the world now. And part of that is the the potential to have value unlocked. But the other part of it is very much, I believe, the Japanese government's approach to this. That is to say, if the government really wanted to shut it down in a very harsh way, I think the government has tools to bring to bear to do that. And I don't want to go so far in the other direction to say that the Japanese government is encouraging activism, but I think that the Japanese government, as you said it very well, I think it's the Japanese government is invested in um, having the value of Japanese equities increase over time because the Japanese government, with the pension exposure and all the rest, has tremendous exposure, and the demographics of Japan. That's a big set of exposures that the Japanese government has, and I think when the Japanese government looks at it, the government needs to have Japanese equities trade at values that are consistent with valuation metrics on the global stage, and they're not now. And so I think the result of that is, well, gee, M&A, while we don't need to encourage it per se, we don't want to have a situation where incumbent entrenched boards of directors, management teams, if they get a legitimate, credible shareholder for an acquisition of a company, just give it the back of their hand without any financial analysis and simply conclude that's not something we want to do. That's really not the environment we want to create, I think. And so the METI guidelines really try to throw counterweight against that. And I think, again, well, I wouldn't say that the Japanese government is encouraging come one, come all activist activity to take place. They're not shutting it down either.
Mm.
And they're not using tools to try to make sure that that sort of thing doesn't happen. So, and I think you're right that I think a lot of that is because Japanese government is interested in equity values over time, increasing. And you see the same sort of, I think, phenomenon that's driving the Tokyo Stock Exchange rules as well, to try to have more focus on increasing shareholder value. Not to dismiss at all the Japanese orientation towards stakeholder value writ large. Employees are obviously important to companies, as are vendor relationships and customer relations, all the rest. But there is, I think, an increased focus on shareholder value that all of this is coming together to create.
Yeah, and I also think it's an interesting learning opportunity because not all activists necessarily are coming in just to stir things up. They're effectively coming in and trying to voice their opinion on how to improve and go for that growth that effectively everybody's striving for.
Yeah, I
I mean,
think I think that I'll just say I think that's an important point, and it's one that sort of gets lost often in the media coverage of activist situations. Activists don't go in to a company for sport because they want to torture the board or they want to throw the bums out or that's just fun for them to do.
right.
What they want is to have, I mean, the play is to buy the equity of the company that they believe is undervalued and come in having bought that equity piece in that position. They see a situation where they believe that by moving some levers, they can increase, really, the company can increase the value of the equity of the company in the short to medium term.
Hmm. Hmm.
Whether that's splitting up the company, selling off real estate assets, um, being more disciplined on cost or whatever the lever is. Um, that's what they see. So they get into the stock because they think there's an opportunity to increase value that the company can and should take. They get activists. I mean, they do proxy fights and the like only when they see typically the boards of directors, management teams not listening to them, not really taking what they believe, and you can have different judgments on this. Not all activist proposals are right, of course, but they're not all wrong either.
Yeah.
But when they see what they believe are obvious levers to increase value not being executed upon, that's when it turns out activist.
And I think the question I'm always asking all the way back to Bear Stearns and Lehman Brothers is where's the board? And so I think more and more, even in Europe, I understand that board members are personally being penalized financially if they're not living up to, the responsibilities that they have on the board. And when you look at Japan, you can't help but see board in the same sentence as governance. And even, ESG, it's ESG. It's really the
Right.
governance issue that everybody's looking at. Do you feel and furthermore, I think, we're looking at the diversity of the board, not just necessarily by gender, but also age, how many outside directors, et cetera. Are they qualified? Are they just there, to impress people, or are they actually doing their job? What do you feel is kind of the cultural shift around boards in Japan?
I think it is gradual, but it is happening that we're seeing more and more Japanese boards with, if not a majority of independent outside directors, at least a very significant number of outside independent directors. And that makes a very significant difference. Inside the boardroom in the United States, 80, 90%, I don't know what the exact numbers are, but most of the companies that I deal with, the top 17 companies by market cap in Silicon Valley, for example, that's my natural client base. Almost all of them have only one management director on the board. The rest of them, with some exceptions, the rest of them of the board members are all independent outside directors.
Mhm.
Occasionally, you have a former CEO stay on the board or some sort of situation like that, but it's normally the CEO who's a board member, and everybody else is an independent outside director. The consequence of that is you don't really need to tell a board of directors that is composed that way that their job is to uh, oversee the CEO, oversee the management, challenge management, not in an ornery kind of way, but to raise questions, ask the right questions, and ultimately that their fiduciary duty is to all shareholders. You don't really need to give that speech. They know that. And um, there's not really personal liability exposure for most directors on U.S. boards of directors. It's sort of overblown, to be honest, because
Mm,
there's indemnification arrangements, there's D&O insurance, there's a lot of things that make it very, very difficult to ultimately get to personal liability for directors. But directors are very concerned about their reputations, about how they behave,
sure.
and whether they're doing the right thing for shareholders. And I think similarly, when you get into a Japanese boardroom, if you've got a significant number of voices in the room who are independent that aren't management, they do serve as a check on management. And when I say a check, again, it doesn't have to be ornery or confrontational, but just a disposition that says, look, you answer to shareholders and just voice consistently and regularly, is this the right decision for shareholders?
Yeah, I mean, plugging a little bit about what II Research does effectively, we're reaching out to the market globally to see who's voting for stock analysts on the sell side, as you know. And I think if you go back maybe 20 years, it was maybe literally 100 people on earth that were trading Japanese equities professionally. Now, over these 20 years, I don't know how many have retired. I don't know how many, are still around. But I think the other thing that I caution a lot of people that I work with in the market is don't take a snapshot of how things are today. We need to remember that over these last 3 decades, which I came here in '89, and so over the last 3 decades, whereas seeing is believing, believing is also seeing.
Mhm.
And so getting a lot of the investors to reallocate more into Japan and to really believe that the growth potential is there in order to see those opportunities, I think is a big question mark. And especially in the last week, I mean, I was away, but I can see the currency moved. I can see the market moved. And you realize it's not that simple. It's not just let's try to make it attractive to overseas investors to come in and invest in the market and effectively find that growth. I do believe the earnings are there. I believe it's a true uh, placement at the levels that we're at in the market. But there's also over the course of these threat eggs some kind of poison pills or pain growing pains, if you will, that they had to take. I mean, under Koizumi, it was writing off non-performing loans, and then you saw it go from the bottom about seven to double after that. And I think where we're at today, there's obviously a question about the yen. There's a question whether this is true growth and whether people believe it. The other reality I feel is as the shareholdings are unwinding and a company has 30% that all of a sudden is kind of exposed, they want to see who they should be targeting vis-a-vis investor targeting. And that's where I feel II can help them. But I think as that is the case, and activism can't be painted on everybody's forehead per se, but what do you feel is like the roadmap for companies and boards dealing with activism going forward in a more proactive and constructive way?
Yeah, I think it's important to get ahead of it in the sense of being prepared for a call that takes place that says from an activist that says, I own a significant part of your stock, and I want to come in and talk.
Mm,
Um, Once a company gets that call, that shouldn't be the first time they've thought about activism.
right,
In some ways, it's too late when you get that call.
right.
I think uh, there's probably not a board of a U.S. company of any size that hasn't had me or somebody like me, oftentimes together with an investment bank, financial advisor, come in and talk to the board about activism,
Mm,
about what the vulnerability is, what the playbook is, what to expect, and really, in your particular situation, company, what is your vulnerability index? And that can be along the lines of governance, stock price. Are you taking a conglomerate discount? How have you been performing? And do an assessment of what your vulnerability is to that. One of the things that we routinely advise companies of is to get ahead of all of this by doing a really careful assessment of what you look like from the outside in. So if you are a company looking, I'm sorry, if you're an activist looking at the company and trying to uh, increase value, what would you see? Would you see a conglomerate discount? Would you see obvious things that could be spun off? Would you see too much cash on the balance sheet? Would you see a lazy balance sheet that can be dealt with? Do you see a board of directors that seems old, long, entrenched, that isn't paying attention to increasing shareholder value? Are there levers that you can move? And it's fundamentally a financial analysis in the first instance
Mm,
of what the board can do over the short to medium term to increase value of the company and increase corporate value. That doesn't mean you do everything, and it doesn't mean that you look at that and decide to do everything that might be on a list of things you might do. But it does mean that you think through it ahead of time, and then maybe you do some of those things and say maybe you don't. But if you don't do some of the things that sort of appear obvious, you can get out in front of that as well with your shareholders and talk about why this business that seems to be separate from this other business, in fact, they go together. In fact, they're synergistic. In fact, um, splitting them up doesn't make a lot of sense. You don't have to take that head on, but you can plant the seeds for that as a position. But doing all of that ahead of time is far better than trying to deal with an activist who knocks on the door, says you ought to spin this off, you ought to give back this amount of cash to shareholders, and then you try to respond in real time, very quickly, and with a board that hasn't really dealt with the issues. And in the US, what we find when there hasn't been that sort of preparation is oftentimes we find that management and the board isn't necessarily aligned on some core strategic issues. And then even within the boardroom, you can find lack of alignment among board members, among independent directors. And so part of having that preparatory discussion is to get those issues out on the table, have a real strategic discussion about them on a clear day, and not be put in a position where you're trying to make decisions in a pressured kind of environment that activists often bring to the table.
mm. I think, when we look at the market overall, the 3,000 plus listed companies, and I think in reality, maybe the top 200 are always showing up in our polls. And presumably, a lot of them are proactively looking at how to deal with activists, etc. But I think, the message is probably to the tail of the 3,000, 300 companies that quote unquote need to be more global, who need to, basically, make their business plans or their, integrated reports in English, etc. And then kind of join Japan Inc., if you will, as far as the total overall growth we're looking for in the market.
Yeah,
I,
I think communications is really key in all of this,
yeah.
and I think it's an area that Japanese companies are, by and large, and this is going to be a generalization, it's certainly not true in many, many individual cases, but Japanese companies writ large have difficulty, I think, communicating with the street in a way that US or European companies communicate. Part of it's a language handicap and an issue there. But part of it is just the orientation of how to communicate with transparency and strategically. A lot of Japanese companies tend to, it's all numbers. They put up the numbers. Here's how we did for the quarter. And they're not consistently going to a strategic vision and the strategy for the company overall. And therefore, the investor base doesn't necessarily understand it. And that's a problem if that is happening. And so I think more effort on a clear day communications, investor relations communications is really important to try to get right. And that's particularly true, I think, as there's more, to your point earlier, there's more foreign capital flow into many Japanese corporations than we've seen ever. And so we see many, many Japanese corporations with upwards of 30% or more ownership by foreign institutions. And that makes it even more critical to be able to communicate with that constituency, as I say, on a clear day, let alone when you're facing some sort of activist situation.
Mm.
By the way, in the US as well, because of the experience that we've had over many, many years now with activism, the position of the investor relations head has really been tremendously upgraded in the United States. That has become a much more strategic, dare I say, respected position where the C-suite recognizes that having somebody in that kind of a role that institutional investors trust, that they can rely upon and get real information from, consistent with Reg FD and disclosure obligations and the like, of course. But somebody that is a trusted person in that role makes a really significant difference when a company is in crisis or under pressure.
Yeah. And I think the cultural rotation of jobs in Japan is something that affects that, because sometimes you're dealing with four different rotation teams in the same department in the same company over 4 years, right? And so that
That's right.
consistency, kind of goes away a little bit. Um, Kind of in conclusion, I mean, I've been in Japan a long time, and I know you've had longer experience than I have. I've always been bullish on Japan, maybe because I want to justify being here. Are you bullish on Japan? Can I ask you that?
Yeah, I may suffer the same bias because while I've been away from Japan, other than twice or three times a year, fairly quick trips, I am spending more time there. I want to spend more time there, and I'd like to say that it's because I'm more bullish on Japan, but I'm not sure whether the chicken or the egg came first on that.
Yeah.
I want to spend more time there, but I do think. We've been talking for a long time among my colleagues about, this time it's different. Japan seems to be on the cusp of change. I do feel we're in a very, very different environment now in the last 5, 10 years in Japan. It does feel like there are structural, systemic issues that are driving Japan to some fundamental change. It's not going to happen overnight, which is fine. It doesn't need to. It shouldn't. And I'm not at all here to say that Japan should be like the United States in its capitalist structure as well. I'm not advocating for that at all. But somewhere in the middle is probably, like most things between the U.S. and Japan. Somewhere in the middle is maybe the just right place to be. And I do think that is starting to change. As we talked earlier, the activist shareholders are there, but that in the United States, 30 years ago, that sort of a catalyst drove private equity as well. And so in some ways, private equity, private capital in the United States were the beneficiaries of activist shareholders and the takeover wars of the 70s and 80s.
Mm.
And you're starting to see that as well in Japan as private equity becomes much more active in Japan. That's an unlock for value, and strategic deals then flow out of that as well. So it's a matter of lubricating the whole system a little bit so
Yeah.
that things can change. Capitalism works. Capitalism is a destructive thing, right? Capitalism works on the basis of, bad things that don't work anymore, getting overcome by better things that work better, and that drive towards efficiency and value, societal value overall is what drives capitalism, and you don't want to wreak havoc on the road there. And that's why I say someplace in the middle maybe is right. But I am seeing Japan coming out of, I guess they still call it the lost generation,
Hmm.
and more aggressive management and things that are changing that give me a lot of optimism as to where Japan is going.
And when we look at the market overall, even though I think it was 35,000 in 89 and dipped as low as 7, and now even though it's climbed over 40, the other reality is there are companies, within the market that have still had 5,000% return or 3,000% return. So it's not that the whole country has been in a basket and they're coming out of the water. There's a lot of companies, and I would
100%.
venture to say in a lot of the areas that you focus on in technology, semiconductor business, etc. And I really feel like they are the ones that probably will benefit the most from the growth in the market and the reallocation to Japan. And then maybe on the back of that, some of the other companies will get in line.
100%. I mean, Japan has great assets. It really does. The workplace, the intelligence of the people, the technology. There is a lot that Japan has going for it. And so I do think that there's a lot of value to unlock there as a result. And you're right. If you just look at the averages, it hides some real success stories as well.
Hmm. Because I think, the popping of the bubble was extremely damaging,
Traumatic. It was
psychologically
traumatic.
traumatic. So it was
Traumatic.
traumatic, yeah.
Yeah.
And so it took a long time really for people to maybe identify, when I say people, for Japanese in general, to identify that actually they are innovative. There is a lot to export from here outside to, from Japan. There is the reality, I think, after 3/11 that you cannot rely on the domestic economy going forward. And so I think more and more as they do look at ways to actually unlock the growth, it's going to be a combination of, bringing in more people, maybe from overseas, to backfill the fact that we do have a population challenge, more M&A transactions with people who, know that they need to do this in order to take the pressure off the shoulders of the workforce that is handling the demand that is there and increasing, etc. So I think it's an interesting time, and I think the culture is changing in the market, and I also think the attitude towards activism and the appetite for M&A is going to increase. So it makes it a very interesting proposition going forward.
I agree.
So thank you very much for your time today. I mean, this podcast is really our way of getting voices like yourself out to the investor relations clients and or buy side, sell side that work with us. Because I think you along with others add a really interesting perspective on Japan, and certainly a sage perspective because you've seen a lot. And so we really appreciate your time today.
You're making me feel old again, but
Oh well, so,
you've
so,
bookended that somehow.
no, somebody said to me the other day, buildings in Japan only last 30 years and then they take them down and put them up again. So even I've outlasted the average building in Japan. So
there you go. There's
yeah,
something to be said for that.
We're just new and improved. We're evolving. That's the way I look at it.
Very good. No, delighted to do this. It's fun, and I'm excited about what's going on in Japan, and I am a Japan optimist.
Great. Okay, we'd probably like to follow up in the future, but thank you very much for your time today.
All right. Thank you.